It's BigT Trading here. Today I'll show you how I made this trade by using some ICT concepts. I traded on the British pound to the US dollar, and I'll show you how I used the US dollar as a confluence to make this trade and get this sniper entry with a good TP of 6.3. So let's get straight into the video and I'll show you how I did it. Yeah guys, I'm recording this video right after it happened. I didn't record my trade, which is unfortunate, but it is how it is. I'll show you how I did it. First of all, I'll go back to when the London session opened at 3 o'clock New York time, and I drew the highs and the lows of today. And the trading plan I use for this trade is in the bottom right corner. It's called the RMR, where you look for a rate, then market structure shift, and a return. I'll explain it further in the video. This is inspired from ICT Trading on YouTube. Here is a picture of me taking the trade during the day on my phone, just as proof so you guys can see I actually took the trade. And now you can see we are breaking the highs of yesterday, right here at the top, which means we can take the first box off in our RMR trading plan, which is the rate, because we broke an high. And now I'll be looking for an entry, and I will go to the 1 minute time frame. Now I'll be looking for a significant market structure shift, which is the second point in the RMR trading plan. And right there we can see a market structure shift, and I'll be marking it, and I'll be looking for a return. The return is when the market retraces back up to the highs. This means you can now look for a fair value gap. You can see there are a lot of fair value gaps, and it's easier to find them on the 1 minute time frame. That's why I use the 1 minute time frame for my entries, and I'll be drawing it right there. I think it's a very good entry because there is a very good risk to reward ratio when you place your stop loss above the high. You could also have used an order block or the Fibonacci retracement tool, but I would much rather use the fair value gap in this situation because I like the fair value gap, and I think the entries with the fair value gap are very precise, and I think you can get a lot of good risk to reward ratio trades by using the fair value gap because it almost always retraces to it. And now I'll be looking for my TPs, and you can look for the recent support levels, which could be the one above this one or this one, and you could also go all the way down here. As I showed my screenshot earlier, I actually got a 6.3 return on one of the trades. I took some TPs along the way because I like to take the profits when it's going down. You don't know when it's going to retrace and go back up, so I like to take profits as it goes, but I actually got a free 6.3 in real life, so that was a very good and successful trade for me today. I hope you learned something from this, and now I'll let the trade run and stop talking, so let's see how it went. And along the way I drew some TPs where you could take profit if you wanted to. I myself took 2 profits along the way, and I let it run to a 6.3 risk to reward ratio, which was my last exit point, and I was very happy with it. And you can see all the TPs got hit, and it also went all the way down to the low of the day, but I took profit just before that, which is fine by me. But you can see this this trading style is very successful and has a very high win rate when you get the correct entry and the right setup. And here I've drawn where you could take profits along the way. I took mine profits between take profit 1 and 2, and around the third one, and my last profit take profit was the fourth one, which was a 6.3 risk to reward ratio. Now I'll show you how the dollar gave me confirmation to take this trade as well. And now we're on the dollar, and I'll be doing the exact same and draw out the highs and the lows, and I'll look for a break of the high or the low. And when we see a break, then we'll look for the market structure shift, and then we look for the return to enter for a long in this example. So I'll let this run and you'll see how I did it. And I'll be drawing some text along the way just so you can see what I'm thinking. I noticed we have 3 eagles lows, and we had a lot of liquidity resting under it, which means we were probably going lower, and we'll be looking to take out all of the liquidity before we make new highs. And here you can see we keep on breaking the lows of the day, and we make some displacements, but the displacements are not big enough for me to call them market structure shifts yet. I want a huge displacement or microstructure shift that indicates we are going in the opposite direction, which means I can go for a long when I see the return on a fair value gap or the Fibonacci retracement or the order block. And now we have swept a lot of liquidity, which means we can be looking for a long when we see a huge displacement. We see a displacement again, but it's not big enough, so I'm still waiting. And there we see a huge displacement or a market structure shift, and we can now be looking for a retracement and then entering for a long. And now I'll be showing you how I'll be using the Fib tool, the order block or the fair value gap for an entry, and you can use all of these together so you can get a more precise entry. In conditions like this where we see a huge displacement, it can be hard to draw a fair value gap at the right place. So using all the three tools together is a very good way of knowing when and where to long it. And here I'm drawing my Fibonacci retracement tool, and you can see I draw from the swing low to the swing high, and then I'm marking out the discount zone, which is under the 0.5 mark. All of it under here is a discount, which means it's a good price to buy it. And then you can also be using the order block right there. The order block is the candle prior to the move down or up, and in this situation is the candle prior to the down move. And you can also see we have a lot of fair value gaps, and if you don't know which one to choose, I would choose the one below the 0.5 level. Then you know you have a good entry, and the risk to reward ratio is also good in most occasions. So that's the one I'll choose. And you can see these two, they overlap in the middle, and it will be my point of entry in this situation. And when you have drawn this, you can now place your stop loss and take profits. And I'll be zooming out to see which take profits I can take in this situation. And I think it can go to this level, most likely. And I will be putting my stop loss under the candle prior to the move up. By looking at the US dollar in the GBP USD situation, I get some extra confirmation that my trade is correct, and it's a nice entry I got. So that's the reason why I also looked at the US dollar chart to see if I got a good entry and the trade was valid. And yet again, we went up from the point where I predicted it would go up from by using the ICT methods. This shows again that the ICT methods are very precise in many occasions, not always, but in many occasions. And if you time the market correctly, you'll get some very, very good trades. And we are now at the end of the video. Thank you for watching. If you learned something new, make sure to subscribe. If you liked the video, like it, subscribe, and leave a comment. BigT Trades here. I'm out. See you in the next video. Bye.